Okay, good to see you all. Please keep your camera on. Ayush, others, good to have you. Uh, we will start the session now. Anyway, it's 15 minutes. Uh, let doctors join later. No problem. We are now going to complete today the module 1, which is investment banking. We have already covered maximum part of it through different iteration. We did it twice, some of it. We have also covered up to sales and trading, where we talked about why front office is so important today, correct? And now we are going inside the equity research department, where I believe Ravi Agarwal came, right, from Mirai Mutual Fund, correct? Anybody can brief me what all he talked about and what the equity research department does? Who is going to go and tell me? From the section, if you made notes quickly. Who is going to go and tell us? Okay, Bharat, doctor is here. Somil, Shraddha, Disha. Who is going to tell? Ayush, Vipin. Who is Oppo? Okay, Oppo is gone. Yeah, what did equity research department he covered in? How they work? How equity research department works? एक बताओ चलो one point each. Ayush, tell me what did he say?
So told us about their organization works on equity research. Basically, they research the market and they analyze the market, the what shares are currently leading and what are and how they are leading, and what are the factors which make them leading the market, and what are the future aspects of that shares, and what where they will perform and how they'll perform in future. They, that type of facts and figures.
Okay.
So
You,
initially, he started by explaining what is equity research.
okay. Anybody else wants to add? Disha, others.
Sir, he explained the difference between credit research analyst and equity research analyst as well. Uh, he explained us that what credit research analyst looks for. Like research analyst focuses more upon the liquidity of the company and how its daily basis operations happen, and what equity research analysts look different from it. So credit research analysts focus more upon the cash flow statements, and uh, equity research analyst focuses more upon the company's profitability, like financial statements, balance sheet, and income statement.
Very good. Very good. Okay, remember this equity research department is often misunderstood. Often, okay? So it is important that you understand clearly their role. They are not there to sell the stock or buy the stock. They are there to just analyze the stock and keep it facts in front of people who are going to invest. So this is one of the most intellectually rewarding role. So if you really want to do something in research, people prefer, you know,
Sir,
equity research.
they analyze companies' stocks and helps investor to make a decision regarding
Absolutely,
investment.
absolutely. All three of you have rightly said, and one of the most misunderstood factor this is, right. So if you have a clear understanding, that's why I asked from outside people to come and explain you, because research analysts are called as a conscience of capital market. They bear all the burden. What is that burden? That whatever analysis they are doing is not going to benefit them, is going to benefit the capital market overall. Hence, they carry that conscience of capital market. So research analyst equal to conscience of capital market. That's what you should know. Typically, research analysis covers more than 20 stock, but 10 to 20 stock in a specific sector, they can pick it up. They publish the detailed reports here, right? Initiation of coverage, when they begin following a stock, and earning notes, they give it quarterly. They will also give their company's earning notes, that how this company has performed against expectation, right? And what was their monthly target for the price, and did we achieve or not. These are the things which an equity analyst also does. So he establishes a price which he believes is a fair value of that share. Write it down, everyone. Fair value of the share, they decide, and then they follow whether the company is achieving or not. And each report which they will publish, which can be quarterly or annual, they can publish a report on a company quarterly or annually, and this is your nano homework. Everybody will find one research analyst work. How will you do that? You can go to any platform, be it Angel One, be it ICICI Direct, be it Zoho. You can go there, or Google, simple Google, and search for research analyst report on one company, and everyone should select one company. Okay, so somebody can select Infosys, somebody can select Swiggy, somebody can select Unilever. Based on which product you use, you select that product company name. For example, if you use toothpaste of Colgate, who manufacture? Colgate Palmolive is the company. So you can just search for Colgate Palmolive research analyst coverage. Okay, download that and look into that report and make 50 word. What was your understanding from the first page of that document? What was written there? What was the major feature? What all topics they cover? Write it down in 50 words and post in our group. Can anybody write this into the WhatsApp group itself as a homework? Nano homework number 1. In 50 words, summarize a research analyst report on any stock of your choice. Any stock of your choice. Ideally, that choice should come from looking into your room and identify. Like if there is a drapes behind others, or there is a bed sheet behind you, you can look into which company makes it. Yeah, Bombay Dyeing or Raymond's, right? Go and take that company and download the research analyst report on that company. Clear, everyone? How to do it? How to do it is clear, right? So always remember, these analysts always recommends 3 things. Either they will say buy, hold, or sell, and they will not buy, because there is a controversy, and now government is very strong and strict on this, called front running. Of course, this is not done by research analysts, this is done by the investment houses. What they do, the research analyst will prepare the report, buy, hold, or sell. These guys, the fund house, the fund manager of the fund house, which collects the money from you to invest in mutual fund, they collect money, right? Franklin Templeton, SBI Capital, they collect money from individuals and they invest in mutual funds, correct or wrong? What they do, they collect money from people through SIP or through direct purchase, and then they invest. In between, this fund manager will go to research analyst, equity research department, and ask which project you are working on. There is a China wall that he should not ask, but he will go and ask him. That guy will tell him because he's the boss of the company. And the moment he comes to know, okay, he's giving a buy, what he will do? He will go take your money, not his own money. He will take the money of general people. Rather than putting into the mutual fund, they will go and buy on their own name first. And then when this research report is released, they will go and sell their product. Because when the research report will be published, a lot of people will go and buy. Prices will go high. This guy will sell his own, from your own money. He will sell to you. It's like taking money from you and selling it. This is how equity research analyst controversy happens. Now, please understand, always remember the nuances of research analyst. They sit inside an investment bank, or in financial service company, but they are allegedly required to be independent from the rest of the bank. This they have to maintain. This separation is called Chinese wall, yeah, or information barrier. So write it down. Chinese wall or information barrier is very important for equity research analyst. A research analyst, for example, is covering Infosys. He cannot share their pre-publication view with investment banking team or department. He cannot do that, even though he's sitting inside the same place. Are you getting? So that Ravi Agarwal who came that day, he sits inside the Mirai asset, right? He said Mirai asset, correct? He's working with Mirai asset. Anybody can confirm?
Yes.
Yes, yes.
Yeah, but he will never talk to the investment banking department of Mirai asset. That's why he said you submit your resume to HR department and they will review it and they will select you, right? That's what he said. So always remember, Chinese wall has the real teeth. In 2003, the global analyst research settlement in United States is one of those cases where New York Attorney General Elliot Spitzer, okay, something like that, Elliot Spitzer. This is the same story you will find in a show called Billions. I told you, right? Not for kids, show. Billions. Yes, Billions is that show which covers this story of 2003 settlement of global analyst research settlement, right? Where these people have been penalized, how much equal to half of our country economy. Half of our country economy. 1.4, sorry, not half of our country economy, but maximum company, billions. It's $1.4 billion problem. $1.4 billion was in penalty. Can you imagine in rupees how much it was? Yes. In Europe, MIFID in Europe. In America, it is a SEC, right? Where Attorney General has penalized them. Elliot Spitzer, $1.4 billion. In Europe, there is a rule or regulation called MIFID. 2 regulation. This regulation was introduced in 2018 and they went further and now they want banks to unbundle research from trading and commission. So trading department has to be completely different than the research department. Research department should have their own fund, own CEO, own operation. He should not report to the trading desk. Are you getting a point? This is which regulation? MIFID. This question comes that China wall is not enough because you know what has happened in India. Front running happens. That's why Europe in 2018 has introduced MIFID 2 regulations where they say remove that department completely. Post MIFID 2, research has to be priced and paid. It cannot be a free document. Okay, it has to be priced because whenever something is given to you free, you know there is a price, right? There is a price. So better pay a price even though it's small and get it rather than take it free. And this is what MIFID 2 regulation says. This dramatically shrunk the sell side research industry in Europe. MIFID has dramatically shrunk the sell side research document. Earlier, people wanted to sell their product and they used to put a free, take it free, my document free. The moment you take him free, he is making money somewhere else by buying that stock before, or his family member is buying that stock before, or whatever way. But there is a conflict of interest which they removed it. Clear? In India, even SEBI research analyst regulations was introduced in 2014. In India, which regulation is there? Research Associate Analyst Regulation, which has been updated in 2025. RIA is an introduction done by SEBI now. RIA. This is an India regulation which has been introduced in 2025. But first one was Research Analyst Regulation, which was 2014. where they have said very clearly any individual or firm which provides equity research must be SEBI registered. They should provide all data to SEBI and must disclose any conflict of interest. It's simple, but it is also effective. In 2025, they further added one more thing, that all RIA need to pass an exam called NISM exam, which your college has promoted, right? Thandani sir has given you the access to NISM. You appeared for the exam, right? 1000 rupees, you already did that. How many of you got certified with NISM?
So, right now we
Sir,
have
I'll
not.
be giving exam.
Sorry.
Sir, we will be appearing for the exam soon for this equity
Achha,
research
because
analyst
you
exam.
had exam, you guys didn't appear for it. That's what you're telling?
Yes.
Okay, appear. Look, college is providing you so much facility. Do it. Get that certificate.
Yes.
Add that into your resume ASAP. Yes, it will not require much of hard work. You are getting your fundamental already mostly cleared. Of course, in depth you have to read from that book. And there are some video which are available as well. Just let me know the exam name. We will send you those videos. Okay, you can read from there and appear for the exam. Just let me know the which examination you guys are appearing. Fair. Now,
NISM 15.
career. Sorry.
NISM 15, sir. That research.
NISM 15. Just let me know the
Yes.
name. I don't know this 14, 15, 16. There are several.
Research
Sir,
analyst exam.
equity research analyst.
Equity research, ERA. I will check and I will
Yes.
send you. There is a massive volume of videos are available. Approximately 25 hours videos are there. You can attend that and pass it. Okay. Or if required, we will run the marathon session as well. Just let me know when you guys are planning to book. All of you should book in one day. Okay. Decide
Okay.
and let me know. What we will do is we will do a full one day marathon. I want you guys to get certified. Okay. So whoever attend, make sure that you pass. We'll take 4-5
Yes.
hour session. We will summarize everything there. I will cover that. Okay, it's
Yes.
much lesser than CFA book. But let me know, and one day. So somebody should run a vote. Which day we should select for examination? Okay, run that voting. Let people vote for it. NISM 14. Yes,
15.
15. Okay,
And
14.
it's a 15.
15 done.
Research
So you
analyst
guys
exam.
get certified, all of you should get certified. It has a value. Okay, it has a value. A
Yes,
lot
sir.
of people will give you, and in your LinkedIn that should go clear. But let's prepare for it. We will do 5 hours marathon. Just let me know in advance so my team can slot that time and we will have it. Yes, but fix a date. Yes, and put it, all of you try to do it in one day possibly. Where is the examination center in Raipur? Where is the Prometrics center where you can go and attempt the exam? There has
Sir,
to be
Saurabh sir told
Prometrics.
us that if there are 30 participants, then we can organize in our college itself.
Then get the 30 participant. Yeah, what's the harm?
Yes.
Yes.
Yes, we have already in this group itself 40 people are there. Just if you have even a water gun, put on their head and get them joined. Yes, that also is allowed. Get everybody,
Yes.
get it done in college itself, okay? Or let Saurabh Agrawal sir said know that you guys are planning. He will automatically, he will tell everybody to join on that day, okay? So that is
Yes,
another
sir.
format.
Yes.
If people do not agree politely, you have know whom to connect with. Or best person will be Dr. Sapna. She will to force, yeah? So whichever way you are comfortable, go ahead and get it done. But this has to be done, and before that, just let me know 1 week before that this day you guys are planning. So my team can slot 4-5 hours. We will go through the complete curricula in one day. But you read, okay? You read. You don't wait for my session. But my session I will cover thoroughly. 4-5 hours is enough. We will cover everything. Okay? But you need to know before you come to the session. I can't go like this speed. This speed is too slow. It's a tortoise speed, right? We need at least cockroach speed, little bit faster, not rabbit one. Okay, now let's go to asset management and prime brokerage. Now, as you have understood, his company was an asset management company as well, right? And look, these are the two additional revenue pillar for any investment banking firm. which is often overlooked, by investment banking companies because it requires little diversification. Who is Oppo? He's trying again and again to join. I hope he is not Saurabh Agarwal ji phone. Oppo. Okay. Yeah, he is here. Can you rename yourself? Hello? Oppo A9 2020, very old phone. Bharat Thamani ji, is it Saurabh Agarwal?
Yes, sir.
Achha, he is Saurabh Agarwal. Okay, got it. But he can unmute, means I don't know. I can't hear him. Good. Okay, then it's fine. Let's continue then. Okay, so we were talking about two more revenue pillars. Sorry if I heard it, I made a mistake there. I thought some student is trying to join and is not able to change his name. Now, two more revenue pillars which is often overlooked is one is asset management and another is prime brokerage. Now, most discussion of investment banking focus on IBD today is in sales and trade, right? That's the most lucrative area. Everybody wants to do it. But two more significant revenue engines are asset management. It's a massive money. You will find big companies are doing this, okay, to become really bigger. Major investment banks today does asset management and prime brokerages, okay. Asset management is nothing but you are trying to manage money on behalf of others. What is best than managing money for others, right? So you don't invest your own money, you invest somebody else's money and make your money, okay. So if they win, obviously you win. If they fail, they fail. You don't fail. What is the good option? Are you getting my point? How the success team works? If they have a good product, their investment, you are putting in right products and they win, you are going to make 0.5% or 2% of that money. That's a good money for you. If they fail, of course you don't make any money. That's the only thing you can have. But do you lose anything? No, your customer loses it. That's why asset management is very important function and it makes a lot of money for companies. And this one works with 2 plus 20. Remember, this is the word we use in, this is the jargon which we use. What is the jargon? 2 plus 20. What is 2 plus 20? 2% of the total amount which they will give. So for example, somebody gave you 1 crore rupees. 2% of that you will just remove and keep it in your pocket. So 1 crore is given to you. You will only invest 98 lakh rupees now. 2 lakh is in your pocket directly. No discussion. Is it good or bad? Very good. Why to invest my money 2 lakh rupees without doing anything? Now you have to do the work. If you do the work, you get 20%. For example, if that 1 crore becomes 2 crore, now actually it is 98 lakh rupees and it becomes 2 crore. Tell me what is the return, by the way. Use a calculator, everyone. Take a calculator, calculate it now. If you invested 98 lakh rupees in a year, I return you back 2 crore rupees. What's the exact gain you have? $104%, 104%, right? That's the return you are talking about.
104%.
104%, that's the return.
104%.
Yes. Now, if that is the return, yes, if that is the return I am talking about, then we are saying we are giving him 104%, but he receives how much? he receives 100% gain because he gave you 1 crore, right? So he's only receiving 2 crore. So his gain is 100%. You have to perform 104%. Are you getting the point? When you perform 104%, you get 20% of that. Are you getting? 20% of that, the profit, 104%, so 102 crores you will be earning for him. Of course, you have to give him 102 crore minus 20%. So you will return all his 2 crore rupees, including 1 crore, minus 20%. That's the performance. Only on the extra amount others whip in. On extra amount, 20% you can charge. So he gave you 1 crore. You took 2 lakh rupees, 98 lakh rupees got invested in the market. You converted that 98 with 104% growth to 2 crore. Clear? 98 lakh became 2 crore. You did 104% growth for him, but he received only 100% growth. If he receives 100% growth, which is extra 1 crore, out of that 1 crore, you can charge 20 lakh rupees as your fees. So he gets 80% only as a growth. He doesn't get 104, he doesn't get 100, he gets only 80%. Can you write it down? This is one of the concepts most of the people, even CFA charter holder fails. Write it down. If you have understood, anybody who has not understood, please raise hand now. Ompriya, you just join in, so you can raise hand if you have not understood this concept. Yeah, others also. Okay, tell me what exactly you have not understood, others. Yeah, everybody can ask. Yeah, asking question is no shame in this class. Okay, that's the best thing you can do in this class. Go ahead.
So that after you have said after we have to invest 98 lakh rupees and then it is making 104% return. So that thing I didn't understand.
Okay, clear. You took 1 crore from him, right?
Yes.
Understood. 2 lakh rupees were your fees. Correct? 2 lakh was your fees. So somebody, Ompriya, we are talking about, somebody is giving you 1 crore rupees as an asset manager. We are talking about asset management as a concept. He gave me 1 crore. I have to invest on his behalf and give him returns and principal as well. Up to here, any doubt? Ompriya, others, people who have come late, I am asking them specifically, okay? Now, second step I am talking is, when you invest this money, how much will you invest in the market? Will you invest 1 crore or 98 lakh rupees?
98.
You can't deposit your own money as well in the market. If you do, that is your investment, not the company investment or not that individual investment. So now you put 98 as a fund. You are a fund manager, right? You are a fund manager. So you invest now at 98. But if you have to give 2 crore as a return, that's your target. You fix a target that I want to give him back 2 crore rupees. How much return you have to make in the market in next 1 year? You put 98, 104%. This you got clarified? You have to make 104% to give him 100% acceleration. Same goes to 50%, same goes to, you are getting a point that what money you remove from his capital will also be a return obligation on your head. Hence you get appreciated by performance bonus. Are you getting the point? Why they give you performance bonus? Because you are doing extra work. Because you charge him a fees, your salary, you have to do extra work to give him the target return. And that target return was not 100%, 104. Now, third step here was, which you didn't ask and I am explaining for other people. Okay, the third step is the calculation of performance bonus. You have to also now take performance bonus. Before you disburse back the amount to that guy, I need to take my 20%. I need to take my 20%. So how will I take? I will remove from this 1 crore which I earned for him on 98 lakh rupees or 1 crore rupees. Out of that 1 crore rupees which is extra earning, I will take my 20%. That is called performance bonus. So how much I will be giving from the extra income others? Only the 80%, right? 20% you will keep it. You will give 80 lakh rupees plus 98 lakh rupees. That's what you will return to him.
So that 2 lakh rupees was my fees.
Of
which
course
I have
your
deducted.
fees. You will never return that money. You can't.
And then this 20% was performance. This is separate from that fees.
That's the separate. But again, contract to contract, it may differ. That 20% also will cover this 2 lakh rupees, etc. Can be done. But ideally, this is the situation where you will be returning him 98 plus 80 lakh rupees. So how much actually you are returning? 9 plus 18, 178 lakh rupees. 178 lakh rupees what you are returning. So how much percentage income you got? Only 78%. Are you getting the point? 22% came to your pocket. Is it not a good business? That exact reason every investment banker does this. Clear? It's a very big concept in market. I'm just telling you. So even though you have not understood, you can again ask and write down in the notes. Yes, Somin, ask.
Sir, is the 2% of charge is fixed everywhere or it changes according to the company?
It's 2% is maximum. What's the market standard? Maximum. Okay, maximum. Lowest is 0.5. So it depends on company to company how much you want to charge. But this is on an average asset management charges. Yes, 2 plus 20 is the language people use. 110, 220, 115. What it means? 1% will be my fees, 15% will be my bonus. Okay, if I say 110, what it means?
1%.
1% is your fees.
1% is fees and 10% is the performance bonus.
Now, prime brokerage is similar stuff. By the way, JP Morgan Asset Management Company is one of the leading agency right now. They can charge even 2.5% and people give. And this is in billions of dollars of investment they charge. Goldman Sachs Asset Management Company does the same thing. Morgan Stanley does the same thing, right? These are all major players that sit within their respective investment banking parents. And India, by the way, SDFC Asset Management, SBI Mutual Fund, ICICI Prudential are prominent in this field. Clear? They operate under mutual fund regulations rather than divisions of investment banks. So they are independent body anyway. Got the point? In India, HDFC Asset Management Company is an independent company. It's not part of investment banking.
SBI, which is India's top investment banking company. India's domestic. Which is domestic. India's top investment banking company.
You have JM Financial. We have listed already, right? You will find them always in this page. Mitsui is there. JM Financial is there. Several investment banking. LODR is their name. Who does the underwriting is the real investment banker. Who does the underwriting? He is the real investment banker. I don't know if recently, nowadays no LODR is coming. Since when I have told you, I'm not finding any LODR in the newspaper. But if you see there, you will find several of them are there. The listed company list, by the way, you can, yes, good stuff. But others you ask. Now what do you need to do? And this is your work and actually everybody's work. What do you guys have to do? Put a nano homework. Go to SEBI website and search registered investment bankers. Everyone in this class, put in the chat box as well, in WhatsApp chat box. Everyone should go to SEBI website and search for registered investment banker. Or Google पे भी search कर लो, link दे देता है. Go there and check how many are there. Get me the complete list in an Excel format. Not everybody should post me, but if you have done, give me the count. Homework is give me the count how many of those are right now active. Clear? वो ABCD सारा listed होते हैं. Clear है सबको? They are registered ones, okay, who can do underwriting. And then there are unregistered ones who will only do investment, asset management, prime brokerage. They are not listed. You will not find them. So they are not complete bouquet of this. Also you can find merchant banker. Merchant bankers are also in India, are parallel to international investment bankers. Merchant bankers, okay, they also do a lot of LODRs. Clear? So if you find, that is well and good. If you don't find, you have to find merchant banker. Registered merchant bankers, they will give you that data. Clear hai sabko? Everyone? Clear?
Yes, sir.
Okay. Now let's move to the next. So homework you have understood, right? See, even government companies are recruiting you guys. You can see there. Can somebody read it? I don't know if it is readable. This is NPS,
It is
which
not
is hiring right now. Of course, they are hiring
NPS.
senior people, but
National Pension System Trust.
absolutely, Shraddha. So this National Pension System or NPT Trust is hiring right now. Of course, they are hiring senior people. They are hiring AIF cell head, etc., etc. And I think this was 16th was the last day. So you can even join government companies. They have also a lot of opportunity. You saw, right? Dr. Saurav is sending all these jobs which are there on NISM. But get that NISM 15 and then apply, your weightage will be higher. Hence, you guys should do it ASAP. Don't wait for examination. Examination will come and go. You won't be able to be preparing that separately. Time मिलेगा क्या फिर से?
No, sir.
प्रॉब्लम है ना? जॉब में एक बार आ गए तो फिर तो अनदर प्रॉब्लम है. पहले जॉब में टिके रहना है, फिर आगे का सोचना है, प्रमोशन देखना है. दैट्स अ डिफरेंट बॉल गेम ऑल टुगेदर. Okay, so do it whatever study you can do now. Now, prime brokerage is completely a different business. It serves as a hedge fund, mostly hedge funds. Okay, when a hedge fund wants a short sell a stock, they generally, what hedge funders does, they want to sell, short sell. They don't want to buy or sell anything. They always want to short sell. Clear? They want to short sell their stocks. If they want to do that, they need to borrow share from somebody, right? Short selling, have you heard? Anybody has understood this concept? How many of you have heard short selling?
I have heard
Hand
that.
raise. Huh?
When price is it is less than people sell this stock. I think this is a short selling. When market is going down.
Okay. You are telling about option trading. I'm just saying that, okay, Disha has not seen, Ayush has not seen. Just I'm asking short sell. Short sell means what? Short sell means simple, that you just borrow from somebody and sell their stock. You have a shortage of that stock, still you are selling. Are you getting? Short sell. Shortage of stock, still you are selling. Means what? You don't have a stock and you are selling in the market. How can you do that? You can do it by borrowing it from somebody. For example, others own Infosys stock. Vipin doesn't have it, but Vipin has an idea. What is that idea? Idea makes money. He has an idea that Infosys stock will be going down. He has this idea. Here, this is what others was telling, complete process in summarized. I'm just dividing it. So he had an idea that this stock will go down. He has some insider information, or he has some information, or his technology, his researchers are so capable, they have found out that it will go down, right? So what does he do? He go inside the market and announce, I want to sell share, I want to sell share, right? Vipin does that. There will be Shraddha who wants to buy Infosys. She doesn't know this information. She thinks Infosys is the best company in India. It will always appreciate. And she also thinks this price is very low. I will get much higher. This is what Shraddha is thinking. Shraddha will come to, Vipin and say, sell me this stock. Now, Vipin is in a problem. What is that problem? He doesn't have that stock. So he will call others. Others, can I borrow your stock for next 30 days or 60 days? Every month there is a date of expiry of this stock, options. So he will say that, okay, I will give you for a month as a rent, but I need my stock whenever I will ask for it. And you say, yes, done. Now you give this stock to this Shraddha. Shraddha takes it and prices start going down. Now Shraddha would sell it to somebody else. And none of you had this. Others is only having the stock. Now market has created this facility, and that facility is called option trading, future trading. where you need not to find others. Market itself allows people like Vipin to create such imaginary stocks. But only risk he will carry is the moment Shraddha will ask this stock, he has to make her available, whatever price in the market is. So if the prices are going high and Shraddha wants to sell, she will call Vipin. Vipin, give my share. I am selling it now. Okay. Now Vipin is stuck. He thought prices will go down. It was 10 rupees. Now it is 12 rupees. He is making losses, but still he has to buy and give it to Shraddha. He cannot say, sorry, I was trying to play game here. I was in option market. He can't do that, and that is why SEBI is there. Clear, everyone? So whenever this process need to happen, there will be some company who will enable this process. SEBI or NSE or BSE is a market, but there will be people behind it, and those people are called prime brokerage companies. Yeah, they help hedge funders, they help Vipin, yeah, people who wants to buy and sell imaginary, right, or borrow or sell, to follow this process. That's what they do, right? So whenever hedge funders, and ideally Ray Dalio, needs the leverage, margin financing, they need some margin financing to amplify their brokerage profit. And why people does it? They just do it for a small profit, but that small profit is exponential when you are just borrowing and giving it to somebody else. You are not putting any money, right? Vipin didn't put any big money. He might have given 1 rupees rent to him on 100 rupees stock. That's what option market is. It never asks you to put 100 rupees. So he never have 100 rupees. He took from others, sold it to Shraddha just by giving him 1 rupee rent. Profit and loss, again, if whatever will happen, that is his fate and that is his skill. Okay, but he, from 1 rupees, if he is able to make 2 rupees, 100% gain in 1 month, is it not a good stuff? 100% gain, right? He put only 1 rupee to others and he earned 12 rupees, right? 10 rupees he will give it to others. Okay, take your money. Yes, and 1 rupee he will take his profit, and 1 rupee was his investment. 100% return in a month. In a year, it is 1,200%. Yes, and that's the beauty. People does this game, which is not advisable because this is not the market. Small people should be. Yes, Vipin.
What if others ask for his stock back? Like the prices are going down. Now others will ask his stock to give me back my stock so that I can
Same
sell on the
situation.
current price.
Same situation. If you have not fixed the tenure, you have to now pay the stock, real stock. So either you will borrow from sawmill, yes, borrow and give it to him, or you will go and buy and give it to him. Same situation. So stock will decide whether you are a winner or loser. Stock price. If the price has gone down, will you mind buying it and give it to him? Okay, take your share. Give me money. Today's price. Right? Or of course the price you are saving. There is no price here. 1 rupees rent you gave him and now you have 12 rupees. So 1 rupee profit anyway you are making without doing anything. Understand this. Okay? That's the beauty. Is it clear? Of course, if it is not clear, don't worry right now because we have a session, right? Complete session on option, market, etc. So don't worry. Yeah. So prime brokerage company does this work enabling the market. Now leverage finance and structuring, similar situation, different market, similar stuff. Leverage is nothing but taking loan, taking extra money, taking extra exposure. Leverage ka exact meaning. Can anybody search in Google? What is the exact meaning of leverage? Yes. This is the extra money which you take from market. Leverage, what it means exactly? Disha, what it means? Deepika, Ranjali.
So using borrowed money to multiply your exposure.
So that only, no? That only.
Expecting maximum advantage. So.
Using
Through
less
leverage.
money to take a larger position.
Larger position through leverage. This happens through leverage. So
Yeah.
leverage is a verb. It's an action which you do. It's an action which you do. Clear, everyone? Yes? So leverage finance is that action which gives you multiple benefit. How it happens? It happens just by arranging debt below the investment grade companies, and then private equity players play with this, and they say leverage buyout. How they do it? Very simple. They find a company which has lot of assets but less of price. That is called value investing. Write it, value investing. Value investing is what? Where the book size is higher than the price of that stock. Value investing is when the book price is higher than the book value is higher than the price of that stock. And you won't believe, there was a time when there was several stocks like this. Warren Buffett has made a money on this very concept of Graham Benjamin. This concept of value investing was coined by Benjamin Graham. Okay, he has written a red color book. It's a Bible for everyone. Still, if you get time, it's a boring book, but if you get time and you are serious about investing, you should read that book. For value investing, I am going to take one session, okay, one module, a specific module, okay, value investing. However, I can take 25 because I got it trained from California Institute itself, where Graham used to teach. Today it's having the best of the best program in investment, value investing. They have this program. In India, nobody is offering that program. Okay, I have access to it. I will summarize it in one class and give it to you guys. Okay, value investing is that concept which leverage buyout private equity players play with. What they do? They identify such company. You understood what kind of company? For example, this iPhone, say in second hand market as well, it is selling at 1 lakh rupees. This iPhone is selling at 1 lakh rupees. Okay, in second hand market. The actual price was 1.5 lakh. Now it is selling at 1 lakh. And I am desperate enough to sell it for 50,000 bucks. So book value of this iPhone in the company which I am giving it to you has 1 lakh as a value. So I went to the market, I put a 10 auction, and this happens to all companies, okay? They will put an auction to their assets and get a value. There will be a lot of scrap buyer, there will be interested buyer in iPhone. They will come and put a price based on what they think is the right price. That is called fair value, by the way. When there is a willing buyer and willing share equal to fair value. Write it. One of the best concept in the world. There is a willing buyer and there is a willing seller, then only you can calculate fair value. This is official definition of fair value. Okay, fair value is willing buyer and willing seller, both are ready to exchange an asset at the price. That price is fair value. Clear? So that was 1 lakh rupees. I am selling at 50. Why? Because I don't want to give it to them. They will give me in 60 days payment period. I want money today. I want money today. So what I will do? I will find a buyer who can ready to buy at any price, but give me that money, which is that money is important to me. There, private equity player will come. What will he do? He will not buy from his own money. What will he do? He has assets. He has cash lying in his bank. 50 lakh rupees. He has a cash lying in his bank 50 lakh, but he doesn't want to break that fixed deposit and give it to you 50,000. What will he do? He will go to that same bank and say, give me 50,000 as a loan. See how bank works, okay? How private equity works. What will they do? They have all cash asset transaction with this bank. They will say, I am buying this company whose value, fair value is 1 lakh rupees. You take this document. I have a cash, but I will not put my cash here. I want you to give me 50,000 bucks. Which bank will decline? They are getting 1 lakh rupees worth documents at least. They will not get the mobile, but they can acquire the mobile wherever they want, right? That's the advantage of mortgage. Mortgage means they can take over that asset any point in time. Even the last EMI you default, still they can take over your land and building. You know that, right? You default one and they will take over everything. Yes. Are you getting? So this is the advantage bank plays. So they will give you 50,000. Now this guy, the private equity player, he will take that 50,000, go to Vivek and take his mobile. Now what will he do? He has to do nothing. He has to just go to the same buyer, the previous one, who quoted for 1 lakh rupees and tell, okay, after 60 days you pay, take your mobile, go home. Can he do that? Yes, he can do it. He has money in his bank. He has taken money from bank as a loan. He has not put a single rupee here. Does it matter 60 days after he gets the payment or 1 year after he gets the payment? Not at all. And hence this is called leverage buyout. He buys this company and in 60 days he gets 1 lakh rupees. What is his return? In 2 months he gets additional 50,000. What is his return? Calculate now. Calculated. कैलकुलेशन आना ही चाहिए. आप नहीं बोल सकते हो कि मेरे को रिटर्न का कैलकुलेशन नहीं आता है. एंड आई विल मेक श्योर दैट यू लर्न दिस इवन दो इट्स वेरी बेसिक मैथमेटिक्स. यस, आपको जब तक मैं पूछूं आपके दिमाग में होना चाहिए कैलकुलेशन. ओके, दिस इज द रिटर्न. नियर बाय, इवन नियर बाय इज ओके. ओके, अप्रोक्सीमेशन इज अलाउड इन फाइनेंस, नॉट इन मैथमेटिक्स. व्हाई? बिकॉज इफ यू आर सेंडिंग अ रॉकेट टू मार्स, you are just 0.001 degree different tilt. You think it will reach to Mars? Then the actual trajectory, it will never reach to Mars. It will go to another Mars which you don't know. So in mathematics you can't, but in finance you can play a little bit here in percentage. So always go for approximation and let's start learning that. Calculate quick. 2 month time, 50% return. 100% return, right? 50,000 you invested, 1 lakh rupees you got back. How much is the total return? अरे 100% बोल तो दिया, but
100%, sir.
100% per year basis. What is the monthly return? 2 month, how much you got? You got it in 2 month time, right? So what is the annual return, I'm asking? Multiply by 6 times, that's it. 600% you got. Half na, 12 month ka half mein you got it, because 2 month mein you got this return, 60 days mein. So 360 divided by 360. 600%, yes. 600% is your annual return. Clear? Always give a time of your return. Make sense? So this is how leverage buyout or LEV finance work. It is called LEV finance. LEVFIN. Now, second one is restructuring. The restructuring is nothing but doctor surgery. Here, you can't sell like this. The difference here is this phone is not working. Same phone, not working. Now you have to do some restructuring here, right? Go to a doctor, get it operated, get it fixed. The screen is not working, dialing is not happening. You invested, but will you buy at 50? You will buy at 25 now. So this guy, RX guy, will buy at 25, sell at 1 lakh rupees, okay? Sell at 1 lakh rupees, but he has to invest another 5,000 rupees. He has to invest 5,000. Now your investment is 30,000, your return is 1 lakh rupees in 2 months time. How much is the return I am talking about in a year? How much the return in a year I am talking about? Calculate. बैठने का नहीं, क्लास में बैठ के फायदा नहीं है. Calculate. Okay, I am not talking the example which I brought. I brought much more difficult example, but let's start with the simple ones. Okay, slowly we will go to those kind of example as well when we will go to that chapter module. Yes, right now let's do simple ones. 30,000 you invested, 1 lakh rupees in 2 months you got it. What's your total return? 25,000 में you bought, 5,000 you invested for operation purposes, and then you got the return. Ayush, you are mute. You are on mute, Ayush.
33%.
How much?
233%.
232%,
233.
233%. नहीं पूरा साल का बताइए, 2 महीने का नहीं चाहिए मुझे. That is 2 months return, right? Multiply
Yes,
by
it is.
6 times. Multiply by 6 times. That's the return. 12 times if it is monthly return was this much, then 12 times. It is 2 month return, so 6 times.
It was 2 months.
So 2 month return multiply by 6 times. 233 into 6, how much? 6 3s are 18, so we are talking about 2 to be added, and then 6 into 2 is 12. So 1500, nearly 1500 return.
1398.
How much, Somil?
1398.
1398.
1400%. Yeah,
14.
1400% versus 1000 return is what differentiate a restructuring guy versus leverage finance guy. Clear? Both of them are private equity player. Most of the time they will be private equity. Who has their money, never invest their own money, they will invest from the bank. Make sense? And they might pay 1 or 2% or 10% to bank, still they are well off. 10% भी बैंक को दे दिया annually, still he is well off. Are you getting the point? 1400 minus 10%. Okay. Yeah, this is how they play. Last but not least, the role of investment banking is for risk management as well. Lot of investment banker work in this area and make their life. You heard even the research analysts work the credit research, right? So they are making that risk of credit to be mitigated through their research. Here, always remember there are 6 different type of risk which you need to learn. 6 different types. The first risk which you will be learning is market risk. What is that third risk? Market risk. What is market risk? Market risk is nothing but a loss from adverse price movement. If the price in the market of your stock or the asset which you hold goes down, that is the risk, right? As simple as that. And it can happen because of any reason, not necessarily economic is bad. Yeah, news is bad, Trump is mad. Yeah, anything could be impacting your stock. You need to be aware about it. So risk of adverse price movement, which is measured by generally VAR, value at risk. VAR, value at risk. This is the measurement of market risk. Write it down. Market risk equal to VAR, which is nothing but risk of adverse price movement. Yes, it is nowadays regulated under Basel III for banks. So most of the banks do follow this. Clear? Then you have credit risk. What is that risk? It is the risk that counterparty will take your money and run away. Credit risk is no other risk than counterparty will take your money and run away. Whoever has the cash has always an upper hand. He controls your credit risk. Are you getting my point? Whoever has taken the money, he has always a choice to take your money and run. That risk is always a credit risk you have to account for. Liquidity risk. Liquidity risk is nothing but risk that bank cannot meet its obligation whenever it will ask from. So normally when the banks, how bank works, they take your money and give it to somebody else. Do they keep themselves? Absolutely not. RBI tell them to keep some CRR, PLR. You did that research, right? I didn't see anybody submitting that assignment as well. Okay, but check that. Okay, what they do, they keep certain money with them. Only a small amount. So you deposit 1 lakh rupees, they will keep only 10,000 rupees in the bank. Rest of the money they will give it to somebody as a loan. Yes, and when everybody come in the line and ask their money, can they give anybody their money? ये 1 लाख कोई नहीं दे पाएगा, तो उसका तो 10,000 उसके पास है. Rest of the money he has deployed in the market, right? And that is the risk called liquidity risk. Every bank carries it. That's how they work. Liquidity risk सबको clear है? क्या risk है? बैंक के सामने आप खड़े हो गए, liquidity risk उसको आ गई. So till the time a depositor is not standing in the queue, banks are good off, well off. If they come and start withdrawing their money, they have a liquidity risk. 2008 crisis, which was the collapse of Silicon Valley banks, is one of those. By the way, Silicon Valley bank collapse happened in 2023. Remember that. There were several SVB SBB. The name of that bank was SBB Bank. They collapsed in 2023. That time also there was an impending risk or liquidity risk, high, very high liquidity risk. People were worried. Everybody were on to their banks. So look, psychology works completely different. It works like if one buddy, even though he is having an account with Yes Bank, you have an account with SDFC, but if he goes to Yes Bank, he will call you and say, I am going to my bank withdrawing all money, there is a problem. You will go to your bank and you will stand in line as well. Percentage will be lower, but still that risk come to all the banks. That's why they do stress testing. They do stress testing. Under Basel III norm, there is additional testing happens on the banks all the time to check whether they can control such kind of risk. Then comes operational risk, which captures everything else. When the system fails, right, human error happened, internet does the forgery. You have heard, right? Some people got crores of rupees in his account. 1,000 crore, he can't count the zeros. Yeah, he had only 4,000, suddenly 1,000 crore rupees was in his account. System error. All that, if it happens, that can create operational risk to any banks, and that is called risk from failed internal processes. That is operational risk. Then you have a regulatory and compliance risk. Tomorrow RBI decide not 10%, you have to keep 20% of the total deposit. Now you have to call all the loan guy, yeah, return my money. I have to keep 20%. Where I will get 20% now? Are you getting? That's another risk. So if there is a regulatory changes, that also can bring a risk, and that risk need to be addressed as well. One Malaysia Development Bank, MDB, another scandal happened because of this. Write it down somewhere. One MDB. Okay, this is that risk. This risk was regulatory and compliance risk. Suddenly Malaysian government decided they will not allow anybody to run like this. He was a son of a prime minister of that country, so he was running whatever way he wanted money from the sovereign wealth fund. Suddenly new government came, they put a new regulation, and this guy has gone bankrupt, taken down several people along with him. Clear, everyone? And last but not least is reputational risk. Another aspect which an investment banker does is compliance, legal and regulation. And these are different regulations which are there right now. Take a screenshot. This will help you in any interview questions. Okay, there is no question apart from this on compliance and legal regulation which are applied to investment industry. So take a screenshot, keep it with you guys. Okay, United States ACC, FINRA, OCC, Fed, CFTC, these are the few authority who are regulating it. European Union, ESMA, ECB, EBA, National NCA are the bodies. Okay, what you can do is third nano homework. First one, what was the homework?
The making summary
Search.
of search analyst report of choosing one company and making summary in 50 words.
Yeah, search for it as well. Yes, search and create. That's one. Number two.
To count the number of SEBI registered investment bankers at SBI website.
Yeah, number two. Number three will be that take the primary regulators and find out their full name, because I have given you the codes here, right? SEC is Security Exchange Commission. ESMA, you know. FCA, Financial Conduct Authority of United Kingdom. SEBI is Security Exchange Board of India. Get everybody's full form and again write as a third homework. Clear? Third homework. So today, this is one of the best model, earns a lot of money for a lot of people. That's why a lot of people does investment banking. Now, this I have already done. Please take a screenshot of IPO process. We have already discussed detailed. Take just a screenshot, right? This is how IPO process generally work. So it start with selection and mandate. You will be selected. Company selects the investment banker, right? As a book runner, they run the book. Then preparation and filing an investment banker will do. They will create 300-page document, which is called draft red herring prospectus. Once that draft is approved by SEBI, you submit red herring prospectus. So draft will be removed. And then you start doing the road shows. You go and start meeting several investors. Road show means you will call 10 investors in one room and tell them what is the whole thing about, why you are bringing IPO, what is the reason for it. Clear? Then you go for pricing and allotment. Final IPO price will be set based on the valuation you have taken. And in India, you have a ASBA mechanism through which you do. Green shoe option is also available through which you can do it. Last but not least, listing and stabilization, which is job of again book runner and leading manager, BRLM, right? They do it on any stock market and they have a responsibility to disburse everybody's stocks and collect the money. Clear? Valuation today are following 6. Now there is a valuation session itself, so I'm not covering it, but you can again take a screenshot of this. Okay, there are 6 specific methods are available. Most used, misused, method is discounted cash flow. Most misused. So be careful about it, right? Every investment banker's journey starts from discounted cash flow and ends at net asset value. So this is the complete life cycle of investment banker. They will first start with discounted cash flow, then they will find a comparable company similar to their companies and see what is their value, what is your value. Okay, through ratio analysis this is done. Then last transaction, for example, last time Infosys sold their share as 25 rupees to institutional investor. Now do you think they will take this time 20 rupees? Of course not, they will take higher than that. Make sense? So precedent transaction is that. LBO analysis is also done on the stock, that if I take fund from market and buy this stock, will I ever recover my money? That's another approach to doing valuation, that is called LBO analysis. Sum of part, SOTP, this is nothing but taking one company and divide into different departments of that company, okay, or taking different subsidiary of company and adding them together and see whether they are reaching to the group value or not. For example, Tata Group has thousands of companies, right? All those company value should be added and seen if the Tata Group value is making sense or not. Net asset value is nothing but applicable on mostly on REIT, mutual funds, insurance company, these company who produces their book value, means asset minus liability value, that is called net asset value. Clear everyone? Now financial modeling is one of the critical requirement. Okay, generally your Deepak, what is his name, Dr. Saurabh, who is their IT person who in the college, IT professor, I'm forgetting his name.
Amit Srivastava, sir.
What is his name?
Amit Srivastava.
Amit. Yes. He generally takes this, but of course he doesn't take the modeling part, but he takes the Excel part of it. So you have to check, or Dr. Saurabh will check when he can do the Excel part, so we can train you on the valuation modeling part. Yes. So we'll see that your Excel is done. Once Excel is done, then we will do the projection part. Make sense, everyone? Yeah? Clear? Now, today project finance or infrastructure banking is a key area as well, where you have project only getting funded. So there is no asset included. Mostly for infrastructure project, people get the project finance. Again, similar financial models, but only assumption here is that there is no other asset will be mortgaged. The asset is that road, asset is that airport, asset is that company which you are creating. That is called project financing. Okay, similar financial modeling happens. Again, there is a lot of discussion here. I'm not going to do that and bore you. Global IB revenue I have already discussed in the first slide itself, and today investment banking is growing very fast. One new concept which has come, and our company actually harps on this, okay, and that is called sustainable finance. This is a new model of financing where investment happens to only to those companies which are also maintaining one more report other than the financial report. they have to maintain sustainability report. What is sustainability report? Sustainability report is nothing but that they take care of environment, they are not polluting environment. They take care of their employee, so their employees are satisfied, they are happy, they are in tandem, they are working together, and then they also do governance. So they have a huge governance aspect followed. So we are not investing in a company which is Satyam. Clear? Satyam Computers is one of those examples where governance failure has been seen in India. That is the new paradigm in investment. 1/3 of total asset under management was already there in 2020 under this label called sustainable finance label. Okay, there are different names, different discussion. I'm not going to talk about them. Clear? Done, everyone? Career path could be that you can become analyst, you can become associate, you can become VP, yes, director, executive director, or managing director. These are the timelines. You cannot become associate on day one. Okay, most of the company will hire you at analyst, then you can go to associate, then you can go to VP, then you can go to director if you have 8 to 10 years experience, and you can go to managing director if you have 12 years of experience. Point here is you can make really good money. Now this is the bare minimum which people are making today in large banks. Bare minimum. Okay, large banks. If they are exceptional boutique banks, then you can make even crore rupees. Clear? Clear, everyone? That's the career path. There are certain changes happening in the market. There are certain changes which is happening in the market which you need to know. In next 10 years, when you will be in your career, remember AI and generative AI will be central point. Okay? Bloomberg's GPT, GSAI platform, right? All this will play a major role. Decentralized finance or DeFi is another big thing which is becoming now. Okay? And lot of investment bankers are using this blockchain technology and tokenizing all these assets through decentralized finance or DeFi. So this is the new thing. ESG integration and climate finance is another new thing which you will see in next 5 years, 10 years. Democratization of finance itself, where even a small player with 500 rupees can come into market and deposit, can buy even IPO. Are you getting the point? So retail participation is going to grow massively in India specifically. You have already seen students are doing a option and trading. Yes, once they will be educated, they will start doing investment as well. Make sense? So democratization of finance will happen. Then comes emerging market capital flow. India, Southeast India will attract lot of funds across world. Yes, maybe Iran will start attracting lot of fund as well after they get independence from this war. They are fighting for their independence right now, isn't it? Regulatory evaluation. Basel 6 tightening capital requirement today. Further rollout will happen already happened in 2025, and cross border data integration with DPDP rule. Write it down, DPDP on the regulatory evaluation. Okay, DPDP rule also makes lot of difference to investment banking. With that, we have come to end of module 1, ladies and gentlemen. Okay, I know we have rushed in the end, but why I have rushed? Because we are going to cover this in detail in future session anyway. Clear? But you should know all this so it gets a repetition, and whatever repeats get permanence. Okay, whatever you repeat gets a permanence, right? So what all we have covered? We have covered following 6 points. First, we talked about investment banking is today backbone of global capital market. It is that rear ki haddi, yes, which connects the capital seeker to capital provider. We also learn equal to India global IB revenue, nearly $3.7 billion or $1 billion is today revenue coming for investment bankers itself. $1 trillion, $3.1 trillion. M&A, ECM, DCM. ECM is what? Equity capital market. DCM is what? Debt capital market, right? Merger acquisition, sales and trade are the 4 main revenue pillars, and then there are smaller pillars as well which make massive revenue. But they require a specialized skill, relationship management, negotiation skills, regulatory knowledge. We looked into risk management and compliance as a critical for deal execution today, specifically post 2008, and we saw those regulations, right, which are there, and you are going to do summary of that as well as the third homework, right? Fifth one, India fast growing IB market today is $80 billion in M&A, and it is 90,000 crores in IPOs today is happening. Future of IB requires understanding of artificial intelligence, ESG, digital assets like Bitcoin tokenization, DeFi, right? Digital assets, and emerging market capital inflow, that where from money we are attracting today. If you are going to become a professional like that, you have to adopt these new technology to lead in this field in future. Of course, not today, in future. Make sense, everyone? So that's the end of the session today. We'll meet you again on Wednesday on the regular timing. I'm going to stick with that time. I was traveling last week, so we could not do it. But now we will stick with that. Yes, that's why I've covered today. Bye-bye, take care, and see you soon.
Thank you, sir. Thank you, sir.
Thank you.
Thank you, sir.